Let me kickstart by asking each one of you to give a brief overview about your journey in SaaS and generally in the investing world.
I am Kabir, one of the co-founders at B Capital. I've been investing in SaaS for now about 12 years, when it was not cool and sexy, to last year where it was the coolest thing in the world, to right now where it's a slightly tougher environment. And as a firm, B Capital, we invest across different geographies. Asia and the US are our core focus areas. Cyrus, over to you.
Thank you, Kabir. My name is Cyrus. I lead the technology investing team in Asia for Partners Group. Partners Group is a much different animal, different stage of the life cycle than a lot of investors here. We are by history a buyout firm. We tend to invest $200 million to $1 billion per investment. We've entered late-stage growth investing, specifically in SaaS, in technology, because we do a lot of software buyout investing in the West. So we do come at things from a more late-stage perspective. We look for more scale. We operate with more scale. So I'll bring that different perspective to the conversation. Nishant?
Thanks, Cyrus. So I actually am an operator turned VC. Mohan and I started Avataar together, but here I'm wearing the hat of my former operating days. I built B2B businesses around the world, like Ariba, LinkedIn, Freshworks. So I'm here to kind of share what it means to build local while thinking global.
Yeah, good, thanks. Let me ask you one thing, right? When you say think globally, think locally and scale globally, what do you look for, right? Do you look for companies when you invest that there's certain characteristics which will scale globally? Or what else you look for? Maybe you can, each one of you, maybe Kabir, you can start here.
Yeah, I think there's a big opportunity for Asia, for the world. I think we do think it's useful to start having a bit of a global mindset or regional mindset as you set up businesses, and we've seen that work very successfully for us. 8 of our 150 companies are cross-border SaaS. One of our largest positions is a cross-border SaaS company. So we've seen that very beneficial. I think when it's about thinking globally, and I wouldn't say act locally, but it's leverage strengths locally, right? So it is about how do you leverage strengths, whether it's in Jakarta, engineering talent in Vietnam, talent in Bangalore, building world-class products that you can scale and sell to the world. So I think that's one area to focus on. I think the other new evolution, we saw this in the pandemic, was sales and remote support. And how do you do that kind of globally? So that's kind of a big part. And we're seeing several companies in our portfolio, whether it's Cyrus, Innovase, et cetera, which are leveraging that. So we can talk more about it, but we think that's a big theme, and we've only just started to touch the big opportunity there.
Cyrus, you have been doing late stage, right? By the time when you hit, they are already global, or?
I think most of the time they're already global, so we tend to invest 50 to 150 million in Series D and later, so the business will typically, as a SaaS business, have 20-25 million ARR. Will have proven its ability to win notable customers around the world. We do look for that. In our view, there's 2 kinds of SaaS businesses. Today we're discussing the ones that go global. There are some that serve local markets, but as a very broad generalization, customers in Asia, or at least emerging Asia, don't pay the same price as customers in the West will, nor do they adapt products at the same pace. And therefore, to grow to a scale where you can IPO, I'd say 90% plus of those SaaS businesses will be serving global customers. And so we look for the ability to have a competitive product, to have validation in all the research ratings, the Gartner Magic Quadrant, the Forrester Waves, etc. And the ability also to hire talent that's global. If you have a team that's entirely from the country the founder is from, it does tend to be a limiting factor as you scale. So the ability to also attract and then harness global talent, we like to see some early proof points of that.
Thanks. So before Cyrus, I just want to follow up on a question to you. Since you are doing late stage, have you seen any companies just build scale locally, not going global?
So there are some right now, especially in the MarTech space. When I say local, it's still not one country, but South and Southeast Asia that are gaining material scale. But I think there is a question. So they've reached the scale of 50, 60 million in ARR. There are a couple. Will they be able to cross 100 million ARR and maintain a growth pace without going to Western markets? I think is a question everyone's waiting to see the answer for. Within Asia, I think China is the only market where perhaps you could have a single country SaaS business that reaches scale because the domestic market is so large. In Southeast Asia or India, I haven't seen one that's crossed 100 million ARR of genuine subscription revenue just from local markets.
Thanks. Hey, Nishant, I know you have moved from being an operator to VC now, but your heart is in being an operator. Maybe just touch upon your journey on what you did in Freshworks, okay? Specifically when you started early and scaled them up and on went to the IPO, and maybe other things you see, what characteristics you look for, or what should be doing, the company should be doing as they scale globally.
Yeah, no, absolutely. I think for SMB businesses in general, Asia is a great place to build for the world. Obviously, enterprise, Kabir talked about, but inherently when you think about large markets that have large spend areas, ticket management where Freshworks started was one such area. But implicitly, when you're a small business, you don't have too many custom different requirements. So it's the same product that pretty much works everywhere as long as it's a very nice user interface, and obviously it has to be localization from a language and that perspective. So the businesses are quite common. And here you can actually exploit the cost advantages that India, Asia kind of bring to the table. Plus that we have a very service orientation in the way we go about doing business. So I remember still customers around the world whenever I was to travel said, we really like talking to your Freshworks sales guys because they're not sales guys. They're actually there to help me. They'll call, they're obviously English speaking markets. We used to, be up at night, India time or early morning, Australia time, etc. to make those calls and say, hey, look, we saw that you're using these 3 features. A couple of other people have also found this feature very helpful. And as you kind of drive that adoption, people see value, then automatically, the bills, the charges add up as well. So I think most, in general, these SMB markets, if there's a very large market spend, which US tends to be about 50-60% of the global TAM in any market that you pick, you can actually disrupt them we believe, from Asia, because you can actually bring that cost orientation as well as service orientation to the business. So as a whole, that's, I think, the Freshworks model, which Freshworks Zoho have started to pioneer. You might start seeing, maybe some Southeast Asia companies, but the main thing is the English-speaking nature of it. And so that's the only piece, like Cyrus was saying, China as a domestic market is willing to pay for software. Most other Asian markets not willing to pay for software, but the monetization models might be a little bit different. What to look for, Mohan, in your question? I mean, I think entrepreneurs need to make sure that if you're SMB, you can go global right from day one. In fact, our first customer at Freshworks was an Australian company that happened to put in their credit card and get us started. But for enterprise businesses, you have to be a little bit careful. You have to make sure the product gets built. But there's ways to test out, which markets will work and not before you commit a ton of resources and management mindshare to it. So, we used to do things like test through AdWords just to see what the uptake is in different regions, even though we're not put boots on the ground at all. Just to get a sense of, what USP points are actually resonating in market, even for, say, an enterprise company like LinkedIn at that time when we monetize more in the talent solutions or marketing solutions and so on. So, our keywords like, say, passive talent, is that working in this region or not? If not, then we actually did a lot of consumer work. So when I was running LinkedIn India, it took me almost like a year plus just to get the Indian dynamic working locally. So it tends to be consumer businesses tend to be more local, but you can do a lot of stuff using the internet. So I'll pause there. I'll go into more detail as we need.
Good, thanks. Kabir, let's come back to you, right? You have been investing in Southeast Asia and India, right? What are you seeing today, right? Is the market getting, as you see over the last 10 years, you have been one of the early investors in SaaS. Is the market maturing? Okay? Are entrepreneurs scaling fast? Okay? Are they learning from lessons from others? Okay? How did you see the landscape changing over the last 10 years today, and which are the hot spots in Asia, where you see them scaling?
Yeah, so we've seen this wave over the last 10, 15 years. I almost see like 3 waves. In each wave, those companies are still growing, right? So the first wave, and Cyrus, you were familiar, from the 90s and all, you had a lot of the big IT services wave. And you've seen companies emerge, really large companies, listed companies doing very well, stable revenues and profit. And they'll continue to scale and grow. I think the second wave you did see, which was Asia for the world, where you took a global product, a global pain point, and said, could you use the Asia advantage from a pricing standpoint, right? And so, again, very successful companies, Zoho, Freshworks, example, building very successful companies, and they'll continue to scale and grow. And I think you are now starting to see the third wave, where it's Asia for the world, but building world-class product where you're actually selling at a premium. It's most cutting-edge technology. I know some of the terms like AI, ML are used quite broadly, but it's embedded AI, ML, a lot of the kind of product. They're using kind of tools of DevOps to kind of think about getting software to their customers much quickly. We have several in our portfolio, Cyrus, Innovator examples, right? So it is cutting-edge tech product built in Asia for the world, right? So we're seeing that, which is a really powerful trend. I think to your earlier point is are
there enough talent here to do that here?
I think the answer is it's already showing itself. There is enough talent here. That 22, I think people often use unicorns as a broad term, but of the 30 unicorns in Southeast Asia, 95 in India, cumulatively you have about 22 which are these cross-border SaaS companies. I think what's happened is some of the early talent pool of services kind of went out there. Then you've had a stronger talent pool on the product development side, and they've also come up the learning curve. So can there be more talent? Should there be more talent in areas like Vietnam, Indonesia? Absolutely. Similarly for India. But it's at least building some strong momentum there. And some really good case examples on which we can see the momentum building itself up.
Thanks.
Maybe if I could just add to that, you asked where the hotspots are. So we're tremendously excited about SaaS. Over the last 20 years, as Kabir pointed out, there were two big pools of strong returns on the buyout side: IT services in India and internet-related business models from China. And in our view, SaaS will replicate both going forward. At this point, the volume of globally relevant SaaS businesses, in our view, India is the largest pool by some margin. China has SaaS players that are globally relevant, perhaps in the amount of users, but they don't sell outside of China largely. Australia is another pocket, which for us is part of Asia Pacific, small but very vibrant, high-quality software businesses as well. In Southeast Asia, we think the talent maturation that occurred through the IT services boom in India or the extremely well-funded internet services business models in China, that is occurring now. And so the SaaS wave, in our view, of globally relevant SaaS businesses from Southeast Asia is probably still 3-4 years away. It'll come without a doubt, but you need a very large pool and talent that's ideating, and then some people succeed, some scale further, some scale further. The other ingredient, I just say in our view, is knowing how to sell primarily to Western customers. Most software businesses scale up through markets in the US and Europe. And so where there's a history to do that, like there is in Australia, there is in India, that is an advantage, and it takes time to replicate that.
The stage you come in, you need great talent globally, right? Because they are global players. Do you see anything or advice you'll give for companies on talent acquisition, right? How do you hire a sales talent in US or Southeast Asia and Middle East or Europe? Do you help them?
No, I'll be honest, we are good at attracting talent once a business has a certain scale to convince them that there is capital for growth, to leverage our existing networks in the West to find such people. But ultimately, it is the passion of the founder that draws people in. And we play a supporting role to that. But we do help find the talent, but I'd say closing the sale is always with the founder and the team and the chemistry.
Thanks.
Well, if I could maybe just add a little bit on this aspect, because most people think about sales and it's about hiring a body, right? It's about hiring your first sales guy. And often one of the things that I see founders make the mistake of, or even some of our companies, you want to make sure the whole GTM model is thought through. Yeah. So person is one part of it, but what is your ICP? Who is the ideal customer profile? You may be selling to the largest banks in India, but when you go to the US, for example, say one of our companies, CRM Next, do we go after Bank of America, JP Morgan Chase? Those are like 2-year sales cycles at the least. very, very expensive sales hires. So is that the first port of call, or actually should we kind of go, to a different set of market, build local referenceability first? Okay, so then if you want to go after the credit union space, very different type of sales motion, very different type of market positioning. So it takes a little bit sometimes product market refit. So I just want to kind of make sure, call out that it's not just about hiring that 1 or 2 people. It's about thinking through, almost the MVP, right? Like you have sales, you have marketing, you have pre-sales. That whole unit needs to be thought about. Yeah.
Good, thanks. Let me start with you, Nishant. How important is product strategy, right? Do you put product before going global, or you experiment? What are the options for a company? If you are in a local market, now we are expanding into Southeast Asia, Middle East, Europe, or US, what would be a journey they should take in product?
Mohan, I think for building a global business, the underlying thesis is that the product has to work, right? Otherwise, it is essentially now building a collection of 10, product-specific markets. So I think the product should already be baked before you start to go global. And I think one of the mistakes we've seen in several of the India B2C companies as well as some B2Bs, they've almost gone broad too quickly. And when you start taking requirements from 15 markets at the same time, you actually end up with a very weak product as a whole, right? So actually in enterprise SaaS, we actually like to see companies that have built and solidified their product over 5-7 years, even if they've not made massive revenues. Because what happens in Asia companies in general, India, Southeast Asia, China, they tend to not pay you much, but they'll ask you like 100 of different features, right? Very complex environments that you have to operate in. So as a result, the product's quite well baked. And by the time we take them to the developed markets like US, actually the product is already built. And you get monetization in those markets. So actually product strategy is a little bit more about market fit less than redoing the whole product. SMBs, like we talked about, is generally global product has to work.
Yeah. Good, thanks. Let me ask all of you, right? You've seen the markets here, different markets, different countries. SaaS is one about subscription. Okay? You can call SMB SaaS, and there is vertical SaaS, right? Third option is the local market. You can build large local companies, but if you don't sell software, okay? You monetize through, let's say you are an educational software company, you give away the software free, but take a cut out of the lead, right? Do you see such emerging models where the companies need not to go global, okay? Just build it locally. Do you see such models emerging? Cyrus, you can start, maybe Kabir after that, yeah.
Sorry, I didn't catch the last sentence.
Let's say, for example, like a company, can the company not selling subscription? Right? Just, let's take, for example, there's a company in Indonesia selling for a software to educational institutions. They don't sell software subscription to schools or teachers. What they try to do is to get a cut out of the transactions going through the system.
Understood. Yeah. Understood. I think they can scale, and there have been businesses that have consumption-linked pricing. They're software businesses, but the revenue model is consumption-linked. Is that what you're saying, rather than a flat subscription fee? But the number of successes is limited, Mohan. And I think there is something about having a fixed subscription fee that then grows with users or modules that gives a stickiness and a stability to the business. There's something about it that it might be the preponderance of winning multi-billion-dollar listed SaaS companies have that model. There are a few that are consumption-focused, like Twilio with its messaging APIs, etc.
But did you see like a Twilio in Asia now?
So there are Twilio, one scalable one, a Twilio-like in Asia, but those business models have not demonstrated yet the same economics as pure software. So the Twilio-type guys, for example, are often offering SMS connectivity. Your gross margin is much lower. You're paying the telco. It's quite cutthroat in pricing. It's different. So I think one of the reasons why software has got at scale valued so highly over time is just the stickiness of it and how difficult it is to unplug. With the consumption-based guys, it doesn't seem to quite work the same. I'm not sure why.
Okay. Kabir, do you see it? Yeah.
Yeah, I think the simplest, of course, for large enterprise, you sell 80% gross margin, business scales from 20 million ARR to 150 million ARR, we're all kind of happy, businesses scale well. I think there are models which we are seeing, to Cyrus's point, it will take some time to prove itself out, not as obvious, not as easy. especially markets like Indonesia, markets like India, targeting SMBs, a large number, right? 60 million SMBs. If you look at it from an India standpoint, if you look at the addressable market in Indonesia.
The SMBs don't pay, that's what you're saying?
It's tougher, right? So the subscription thing is tougher. I think where you're seeing models head, and it's not proven out yet, but models head is, can you have deep engagement with the SMBs? Can you transform the way they digitize themselves? Can they become part of the fabric of how they run their stores, run their inventory, track accounting, other aspects? And then to be fair, the hope is that on the back of that, you have enough data to make better, for example, lending decisions. So you partner with a lending provider. Can you then use data to kind of monetize in different ways, later use transactions? So there are some of those now, not proven out yet and clearly not ready for prime time and kind of where Cyrus is coming in, but there are some of those which will evolve, and it's worth at least tracking. Cyrus, you were going to say something.
Maybe, Kabir, sorry, I was not interrupting, but in China, for example, given they service local markets, Chinese corporates, mid-sized to SMBs, also are very price conscious, even though it's a large market. So SaaS in China tends to have lower gross margins than what we see in the rest of Asia serving global customers. They tend to have a much larger services team because customers expect hand-holding. But it is a much harder customer base to keep happy and fundamentally a less profitable business model eventually for that reason as well. So if China is a proxy to see, then the SaaS business models for SME retailers in Indonesia do have a couple of challenges to overcome to get to scale.
The only thing I think that offsets that is sometimes the volumes are so big in SMB in India and Asia that you can actually offset that a little bit, but we are still in the early game of that. Yeah. As wealth creation happens in general for the different things, it'll go the China model and people may be willing to pay more for it.
Yeah, so I think there, and Mohan, I'll let you go to your next question, but I think there I'm a glass half full guy, and so while I think monetization is much harder right now, I think there is a interesting enough opportunity there. It's also a segment which you want the ecosystem, you want the SMBs to be part of the digital revolution. In this part of the world, they're very open to accessing that technology in incredible ways. And so I think it is important and at some level critical for a lot of companies to see how do you crack that monetization model.
In fact, when I look at the markets across Asia, I'm seeing that if you want to crack the local market and build without going global, you really need to have scale. And then, apart from software, you need an operational team. Okay? Whether it's you're doing commerce, or doing education, or you're doing healthcare, because there is an operational component. Okay? And if you don't bring that cost down dramatically, because the amount you can charge your customer is very small. So if you don't have an operating team to complement your software team to bring the cost low, it'll be very difficult to generate profit. So that's a balance here to play. And let me come to some more interesting topics. When do you think, Cyrus, specifically for you, when you are doing on late stage, when should a company think about inorganic growth and M&A?
Thank you. I think that's a great question. So when we do mature, profitable software businesses in the West, M&A is inevitably a part of their toolkit because every software company is not every, but many start as the best of breed player for a point solution. But then at some point, your customer doesn't want to have disparate point solutions, and they start looking for platforms. So everyone's trying to go from a point solution to a broader platform, plug into an ecosystem, and you can't do everything organically. At least most companies cannot. So wisely choosing M&A, especially product-led M&A, has been a successful path for many companies we've seen in the late stage software investing we do in the West. In Asia, in the late stage growth investing, we're seeing that's not yet a toolkit that's been used. Some founders, in fact, I find them being very vocal about not wanting to do M&A. They believe in a unified code base built organically. I think that's great when you're the best point solution. As they scale and as whatever end market they're using, reaches some penetration, they will have to go to adjacencies to keep growing. All the scale players have done that. And at that point, I think M&A is very useful. But I'll just say that M&A can be done very badly and it can be done very well. Very badly is you think there's a business that's not doing well, you buy it at 2 times revenue, you're valued at 15, 20 times ARR, and you feel there's an arbitrage. That's an illusory, temporary arbitrage.
But especially cross-cultural M&As, right? You have to intact, assimilate.
Cross-culture, and you're diluting your own growth rate, right? Whatever you bought is not growing and might fall apart and suck up a lot of your bandwidth. Versus if you buy products that are truly complementary and you figure out how to integrate them. Sometimes you don't integrate the technology, you just integrate the front end. Whatever it is, if you're actually becoming more relevant to your end customer because of the M&A, it can be a very powerful thing.
Thanks. Nishant, I want to ask a question, right?
Yep.
Can you really create a playbook, like for example, on what worked in Freshwork, and go tell a founder, a 10 million ARR company, this is a playbook. Will they listen to you? Okay. How much the playbook can be replicated? What are the behavioral aspects of you look for in a founder whom you want to invest and help them scale the journey?
No, I think very much so. The playbooks, I think maybe Cyrus or Kabir said this earlier, the developed markets behave a certain way quite similarly, and then the emerging markets also behave similarly, but with nuances, right? So you can definitely have a developed market playbook, which is typically about, like we said, the product is established, it's more about sales and marketing. And, thinking about sort of how do you think about sales and marketing? What's the funnel look like in sales, in marketing? What are some of the things that you can do to advance conversion from one step to another? So almost the same ideas. It's more about the practical application of those. But it's a formula, right, in some sense. Same thing with, on the consumer side of product businesses, like with LinkedIn, we were completely data-oriented, right? You had everything instrumented and you could see which dials to turn up or down depending on the market. So I think that is very, that can be, playbookized. The creative aspect of market positioning, those you need sort of a local feel. And that's why you need local teams or maybe the right local advisors to fill in those gaps.
Okay, thanks. Let's come to the markets now, right? Last 2.5 years has been a fantastic year for SaaS companies globally. The pandemic gave a tailwind. Companies grew at 100%, north of 100%. Public market rewarded it. Now the pandemic is gone. Some of the companies sees that the growth rate they achieved is not sustainable. Okay? It's coming down. Okay? The market's corrected proportionately. Where do you see it heading, right? Is that the tailwind good enough to the people who are on the sidelines, not buying software, SMBs, and is it enough to say, I can't live without software. I saw that in pandemic. Okay? I can't reach out to my customer. Is there a mindset change where it will trigger the next $1 trillion opportunity all we are chasing after? Kabir, start with, and I'll go each man. Yeah.
So you asked me a very different thing, which is to forecast. And I'm a mathematician by training. I do believe there are only two types of forecasters, those who don't know and those who don't know they don't know. I'll still hazard a guess. I think there are a few things which will happen. I think at the most structural level, if you look at $90 trillion global economy, I think only 20% of it is still truly digitized. 50% is enterprises, large enterprises also still on-prem, right? So that move to the cloud, the move to kind of software, and whether it's software for productivity, whether it's software from a protection standpoint, deep on cybersecurity, whether it's software from a data infrastructure, DevOps, I think those are all kind of big tools. I think what will happen, again, not forecasting, but multiples, I think that party is over. I think the software in a way benefited tremendously from the low interest rate environment, fundamentally because of the way DCFs work, and when you have low interest rate environments, if there's future profits, you don't mind paying up for that. So I think, I've been investing in SaaS, we talk about it, where 4 times, 5 times revenue multiple was fair value. To last year when 35, 40 times people would say that with a very straight face, it's the right multiple, right? So I think multiples will kind of come down, but will you still build incredible companies?
Yeah.
Absolutely. Will you see a big opportunity? Global SaaS, Asia for the world is only 1% right now. Could that be 5 to 7% over the next few years? Absolutely. Is this a big opportunity for us to kind of go behind? And I think there's enough ecosystem doing that. Absolutely.
Cyrus, do you think the party is over or just beginning?
I think some elements of the party are over, and the valuation has corrected to pre-COVID levels. One never knows where the world heads next, where interest rates head, where valuations go to, but My best guess, in all humility, is that we're not going back to the COVID highs of valuations, at least for 3-4 years. Then there'll be another bull run at some point. So I think management teams and investors, I think, are largely recognizing 4 or 5 realities. One is multiples have come down. 2, for the last 2-3 years, valuation, at least at late stages and in listed companies, was linked to ARR growth, and almost nothing else mattered. Now there's a bit more balance. A path to profitability does matter. You don't have to be profitable today, but there has to be a viable path to profitability, at least at scale or later stages. That's become important.
So EBITDA is important, as you...
EBITDA is important, or at least it should be somewhere on the horizon, maybe 2 years away, but it is a consideration. Demand growth is there and will remain. So fundamentally, these businesses have not changed. It's just how investors perceive them or value them has changed. And so the decisions you have to make when you're growing, in choosing between profitability and growth, is, are you willing, how much cash do you have left? Are you willing to accept a round that may be at a lower valuation than you wanted? If you are, then grow rapidly. Otherwise, look at your cash burn as well. But otherwise, the fundamental growth opportunity that Kabir mentioned has not changed, in our view, has not changed at all.
And Mohan, before you go to Nishant, I do feel bad for the audience because they just heard about this previous panel of the bright sunshine to us, making it sort of dampen. I think the reality is, and everyone knows I'm a pretty direct guy, but I'm also a glass half full guy. The world, if you haven't noticed, has changed. And if you haven't noticed, public markets are down 40-50%. That's just a reality. You still build great businesses, but you just need to be cognizant.
I'm a glass half full guy, but the reality is the reality. Valuations have corrected, at least at the late stage, but there will still be many multi-billion-dollar companies that will emerge from this crisis, without a doubt. It's just that the path will maybe a little different.
Yeah, I think it's how you put it in perspective, right? I also feel, this is my personal point of view, the run-up was crazy. It didn't make sense, right? If you're paying 50x to go into a deal or 100x, at some point you know that that's not sustainable. So I feel like tech stocks got overvalued. So obviously they've had to correct down. But if you actually look at the long-term average for BVP, which is a SaaS index, it's roughly in that same range. It's 8 to 12x, right? And so it's come back to earth, which is good. And I personally think, so that crazy party has ended, but I actually think this is a wave of something very exciting for Asia, in India and Asia as a whole, where in cost-constrained environments globally, Asia does well. This is the IT services boom that you saw, coming out of India earlier. And so, we have now the ability, like if you look at US and European customers, they tended to be, if you're not an American company, I don't want to deal with you. But now they've realized that, I didn't even know that half of these companies, Atlassian is a, Australian company. How many people know that? Freshworks is an Indian company. How many people know that? And so now I think there's an openness that, there's great software. I don't care where it's coming from. And you can build it. And that's our advantage here in India and Asia to capture over the next 5-10 years.
There you go, folks. I think the market is still hot out there. Maybe you have to, not the valuation you would expect. As many, I don't know how many of you are late stage or early stage, but I think the money is available. It's just that you have to tone down your expectation as you go to Series C and beyond. Now I'm going to get the 30, 40. 7 to 10 is more realistic, okay? And focus on profitability, because if you're trying to go IPO, that's very important.
Yeah, agreed.
Now what I see is there are some questions here. If you see which are the global SaaS companies you admire, each one of us, it's a question, but why don't you take a shot? Yeah.
So maybe I'll go first, because I want to pay both these gentlemen a compliment. From Asia, the companies, Freshworks clearly is one that I admire a lot. Trailblazer, first SaaS IPO on NASDAQ from Asia. Second company that people may not know is Kabir's investment, Cyrus. Is going to be the next big winner. A phenomenal company. We've invested in a smaller competitor to them. Yeah. And then at a global stage, I think the king has to be Microsoft. It just keeps, at that scale, it keeps growing. It's amazing what they do.
Yes, Cyrus, you got two admirers. But
for me, I'll go like sales and marketing wise. I think Salesforce has built an amazing machine how to use SaaS smartly, and they really created the category. I would say, but on the other side, if you look at product companies, then I would say Atlassian and Notion are two amazing SaaS companies. Just how visceral they've made the product, very easy to use.
Thank you, Cyrus, for that. So I'd agree on the iCertis part on the private side. I think on the public side, just so many ones doing interesting things, CrowdStrike. I think Microsoft for the kind of culture and how they, when you transform that big tanker ship and what you've done in the last 5 years, that's just incredible. So I think just good learning that even at that scale, you can compound, and compounding is probably the biggest, one of the most powerful forces in history.
You got another question. What are the good rules of thumb for SaaS other than rule of 40?
So I'd say in a bull market, the rules of thumb work quite well, right? So the rules of thumb in a bull market are rule of 40, great. So 60% growth minus 20% EBITDA loss. Are you above that? Great. LTV by CAC, magic number. I think now the markets are not as formulaic. It is more individual company driven. It's more nuanced around, of course, look at the sales efficiency metrics, but it's a bigger thing like how you're pricing, how you're doing on pricing, how you're building the right organization, the sales market, go-to-market motion. I think it's becoming less formulaic, which work quite well in a bull market.
So some of the efficiency metrics outside of rule of 40 are things like your burn index, things like your dollars per FTE, so that you kind of always look to see the cost side, because most of the metrics for valuations have been revenue multiples, and so it's always incentivized the top line. So hopefully you look at it in a more balanced fashion. Yeah.
Cyrus, maybe you can take the next question. When is the right time for a SaaS company to go to US, right? That's where everybody wants to go. Yeah. How do you penetrate the US market?
I'm not sure I'm the right guy, but that's probably Nishant.
Yeah.
No, look, I think the answer is SMB, you're ready day one, right? You create the product when you're ready. Reid Hoffman, the founder of LinkedIn, used to say, you should be embarrassed with your first release, right? Then you know that you're timing it right. So you put it out there, and then, the beauty of Google marketing kind of takes over and drives traffic to you. But for enterprise, like I said, take that first 5-6 years, really solidify your customer base, the product before you try to go to US, because otherwise it's very, very expensive. Several SaaS companies that have burnt a lot of money and time going to the US unsuccessfully because of it.
Good. Thanks, everybody. I think we ran out of time, and thanks to the panel members, and hope you enjoyed the discussion. Thanks.